Chris, so very good to see you. I want to dive right into the headlines, talk about markets and geopolitics with the question, when will stocks recover? Rising tensions in Iran have pushed oil prices higher and created short-term volatility in the markets. Historically, however, geopolitical conflicts tend to have only a temporary impact on stocks. To see what that looks like, let's take a look at the S&P 500's 3-month performance. We do see some red on the board here. So why do we tend to see stocks fall first when tensions rise?
Yeah, it's that initial shock to the system, if you will. The same thing happened when Russia invaded Ukraine 5 years ago. The same thing happened in 2025 with the tariff implementation. All of a sudden, a big shock to the system. And then, the example of 2025, the market still recovered and closed at record levels by the end of the year. And, the hope is obviously here in the middle of this conflict that, we get the oil flowing and that this is short-term volatility, because that's what history tells us it would be.
I'm really glad you brought that up. You are, of course, a student of history. So let's take a look at the data, which again, I know that you love to look at all of these numbers. History shows the S&P usually recovers quickly from geopolitical events. So here we can see several events and mostly short, shallow pullbacks. Explain what we're looking at, please.
Yeah, so what we're looking at here is, the decline in the S&P 500 right after the event, and then the days that it took to recover. And if you'll notice, when it's lower to the right, that's the best case scenario. When you look at some of these situations here, there's the Russia-Ukraine war in 2022. So 4 years ago by this chart, not the 5 I said previously. But that was less than a 10% drawdown, and the market recovered in less than 50 days. Mm-hmm. And we have to go back to Iraq invading Kuwait for a real shock on the system there. And then obviously with Pearl Harbor up there in 1941. But most of those recent volatility pieces, have been much less volatile, and there's more people investing in the stock market than ever before. So that's a good sign. And it just tells you, don't freak out and hit the sell button immediately.
Right. Easier said than done sometimes, though. So, Chris, for investors watching these headlines and rising oil prices, what's the most important perspective we should keep in mind before making portfolio decisions?
Yeah, well, it's important to understand, why are you in the game in the first place? Okay. And if you're invested around your true risk tolerance, you don't have to stare at the TV set. And, if you've been working with us, we've got a plan in place. We probably already have some defensive measures in place as well, so that, if your offensive money isn't quite getting it done in the short term, that we have an alternative strategy. And that's what working with a professional will get you.
Yeah, I really feel like you hit the nail on the head there. Having the plan makes us less likely to react emotionally to these headlines, which can be, of course, stressful sometimes. So just walk me through how emotional investing tends to lead to bad financial decisions.
Yeah, and you've got, this perfect chart right here. It's almost a law of human behavior. Look, and we all, have emotions, and we have to check them at the door on the investing side, because when the market is up at its very highest, some of my most conservative clients will call me up and say, hey, is it time that we get into the market now? I'm like, no, you missed that opportunity.
Right.
And then on the other side of it is, when you capitulate or you feel despondent, you say, I can't take it anymore. That's typically the time you want to actually buy and put more money into the market and ride that wave up. But again, our job is to help educate people to make logical decisions, not emotional decisions. And it can be challenging without a doubt.
Right. Of course. Step number one, having that plan. But Chris, perhaps somebody has a plan, but they feel stressed, which, as you mentioned at the beginning, maybe it's not in line with their risk tolerance. So if somebody would just like to come and talk this through with you, what's the best way to reach you?
Yeah, let's, call Heidi. She'll get us set up, tell you what you need to bring. Call the office, the main office number, 419-332-0532. You could also go to McIntireRetirementServices.com. We're just in the middle of updating all of our websites and a lot of our social media. So, please feel free to reach out here, and we can talk logic, not emotion then.
Right. Perfect. Chris, thank you.
My pleasure. Thank you, everybody.
Tune into Chris McIntire's full radio program and visit McIntireRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntire. Be sure to subscribe.